Did you know that there was more business and why people are so incentivized in order to get these student loans back popping? Shout out to yo boy Maul 8. I'm going to be reading that super chat shortly. Listen, this is the live stream to make y'all uncomfortable today. This is the live stream that's going to make y'all uncomfortable today. On Fridays, I give you the uncomfortable truth so that you can cam up and be able to tell me what your thoughts are and say what you want to say. I'm going to drop the link in the chat shortly. There's a whole sub-industry behind student loans that a lot of people are not familiar with. Let's talk about it, y'all.
Student loans are a big business. The U.S. has amassed over $1.7 trillion in outstanding student debt. Until recently, it was the largest non-housing debt for more than a decade.
The first time it broke $1 trillion was back in 2012, and that's when it caught all the media attention.
We've seen a big growth in the cost of education over the past 10 or 20 years, and this has really showed up in the student loans outstanding.
But while more than 43 million Americans...
Hey, hold on. Let me say this. Y'all know I can see y'all chats. I interact with the chat the entire time. You don't have to put it 8 times and copy and paste it a bunch of times. That's going to get you timed out. All right? That's going to get you timed out. I see what you guys are saying. I see Fan being crazy in the chat as usual. I see RG3. I see Jordan. I see Azriel. I see Tam. I see everybody. All right? Y'all don't have to put it 1,000 times in there. I see everything. I interact with the chat. I'm one of the very few content creators that pay attention to what you guys say and feed off your energy. You don't have to put it 1,000 times. I can see it.
Americans are currently holding student debt. Many are unaware of what exactly happens with their loans.
I think it would be pretty difficult for the average American to try to track where their loan actually resides.
There exists a market where billions of dollars worth of student loans are packaged and sold as assets known as slabs to some of the biggest investors in America.
I would say that most average Americans are not aware of student loan
I see you, true to self.
These securities are very, I would say, not transparent, and it's hard to understanding by average investor.
So what exactly are slabs? And how does it help Wall Street profit from student loans?
I bet you didn't even know that there was an entire subculture that came along with buying and selling student loans and how it is that they package a deal. Here, let me revise it like this. Let me explain it to you like this. For all of you that have a mortgage, right? I know that a lot of you guys are familiar with the fact that they buy and sell your mortgage. I don't even have to go into mortgage, but let's use mortgages, for example, right? Have you ever had a mortgage where you originated that loan, right? So you may originate that loan with Chase or Bank of America or Rocket Mortgage or whatever, so on and so forth, right? But then eventually your loan then transitions over into a completely different company that they sell your loan. Are you familiar with what happened in the housing industry in 2008, in which they would package different loans and different mortgages, prime, subprime, so on and so forth. And so they would package that into one thing, into what they would call a tranche, in which they would ultimately move off their books in order to sell it and make egregious amount of fees as a result of it to somebody that was looking to make the interest off the payments that you were making on your loans based off of the probability of you keeping your payments on time. Are you also familiar with a student loan moving from one servicer to the next? Have you ever seen a student loan move from one servicer to the next? So imagine how much money is absolutely going out the window as far as Biden then pausing or keeping paused just student loans in order for him to try to secure another election victory. Imagine the amount of money that's not moving and circulating inside of the economy from a lot of people that have a vested interest in order to make money off your student loans when you aren't paying them. Imagine how they can move these over into a completely different company, but how that stalls the process if we don't have these student loan payments in flight. There is nothing more important to these companies than to get these loan payments back up in order. And that's why in September of this month, You are going to start having to deal with student loan payments once again. And I'll also tell you this. I believe that student loans is profit outside of credit cards, right? From an interest rate perspective, I believe that student loans is the best investment for the federal government, 100%. Because think about it. Because it's backed by the federal, what are the two things that you can't get discharged from bankruptcy? What are the two things that you can't get discharged from bankruptcy? It's the two things that the government backs. IRS debt, whatever you owe in taxes, you're going to pay that money before you die. We coming to get that money. And student loans. Student loans and IRS. Those are the two things that you cannot discharge inside of bankruptcy. And so if it's government backed, why would they do the thing that's not in their own best interest as far as continuing to make money? It's a whole industry that comes along with paying interest on a loan. So, okay, if I'm a business and I'm trying to understand how I can make the most money possible while also guarantee my investment, the least amount of risk, the maximum amount of profits. Because remember, you can borrow as much as you want with student loans. You don't have to really qualify for them. You don't have to even go through any hoops or anything like that. As long as you fill out the paperwork. If you fill out your FAFSA, they're going to guarantee you two things. They're going to show you what your grants are, usually a Pell Grant. And then also on top of that, they're going to show you what you qualify for in student loans, right? And so you didn't have to have a good credit score. You didn't have to do any of that. All you had to do, and because you took out more than what you really needed in order to really maintain your lifestyle, you were able to acquire a ton of money in student loans. Now, I'm going to make money off of those student loans. How? From the interest payments. So you pay the principal and then you pay the interest, and then they incentivize you to do so by saying that we can pause the amount of money that you paying and then just let it continue to accrue interest over a period of time if you want to go into forbearance. Now, student loans are even more egregious than credit cards. Why? Not because of the interest rate, but because how long you have to pay them. And most people only going to make the minimum payment. So some of y'all are making a income-based payment, which means that the loan continues to grow and you only paying into the interest. You're not necessarily paying down the principal. That's just free money for the banks. That's free money for the government. You're paying an income-based payment. And so what happens is you're only paying the interest, you're not paying down the principal. And so that interest continues to accrue over a period of time. And so you're going to continue to make it. Now, if I can get you to pay for something for 10 years instead of paying for it for 5 years, I can get you to pay it for 120 months. And you probably going to have a life event, so you're going to extend that for 15 years. If I can get you to pay interest for the next 15 years on this loan, understanding that it's front loaded, meaning that the majority of the money that you're paying in the beginning when you first get your job is going to be going towards the interest payments instead of going over into the principal. And I'm going to get you to pay for at least 10 years because you're going to make the minimum payment. Why wouldn't I make a ton of money off of that? You're paying longer in interest for student loans than you paying for anything outside of your mortgage. It's a finesse. So now I'm able to take that and I can market it because I can say, listen, this is what you as an investor are going to make on this for the life of the loan. And this is what our data is saying. This is how many people actually default. This is how many people are actually paying off their loans. This is how many people are going to hold on to their loans. The worst thing for a bank, for a borrower in any industry that you in, the worst thing for a borrower in any industry that you in, is not even the person that don't pay whatever it is that they owe, because they can always come back and take your house. And a house in most instances, as long as they don't have a housing crisis, is going to be worth much more than what it is that you're going to lose the equity in the house and they're going to make much more for it. It's a hassle to have to deal with it, right? That's why they like home loans instead of car loans, because cars are depreciating assets, whereas homes continue to appreciate in most instances, and they can come and take your home and come and get that. The worst thing that they can deal with is a person that pays off their stuff faster, right? The worst thing that they can deal with is a person that does not pay the interest on a loan, because they don't make no money off of you. They don't make no money off of you. When you pay off your stuff fast, Use somebody that they can trust they can hopefully make a little bit of money off of you in a little bit of time that they do. But if you pay off your stuff faster, that's the worst thing for the bank because they don't make no money off of you. Their goal is to lend as much money as possible, not necessarily hold on to the money. Your deposits is just a minimal down payment for their ability to make money off of your money. That's how banking works. And so because people don't understand how money works, they just go out and they take a bunch of student loans. They take a 30-year mortgage instead of a 15 or a 10. They go and get car loans. They go and get credit cards, and they've gamified it and said that you need to build your credit instead of focusing on your assets. And this is how you finessed.
The biggest and the most well-known type of asset-backed securities are mortgage-backed securities.
They don't want me to tell you this. The industry, the banking industry, makes money off of your ignorance, and they want to keep you dumb. They don't make money off of this. This is the worst type of advice that they don't really want you to have sound financial advice because that takes money out of their pocket. The worst thing that you can be doing right now is educating yourself and fighting against the thing that's in your own best interest. Make sure you tap into the Patreon. Link is in the description as well as pinned to the top of the chat.
Or MBS. There were more than $12 trillion worth of outstanding mortgage-backed securities by the end of 2021.
Securitization, its history really started off with the mortgage market. And the mortgage market is a much larger market than other forms of consumer credit, especially other forms of financing of consumer credit. So that lends itself to being a much larger market.
Student loan asset-backed securities, or slabs, refer to securities that are specifically built around
slabs are literally short for student loan asset-backed securities. Student loan, remember that, slabs. Whenever you see somebody say slabs, it stands for student loan asset-backed securities, okay?
The way that borrowers get student loans is of two ways. If they're getting a federal student loan, they usually apply using FAFSA, right? If they're going to get a private student loan or a private credit student loan, they would apply through a bank or through a lender.
And the private student loans is even worse for y'all because have y'all ever seen one of the ways in which they get you to even do private loans is then they get your parents on the hook for it, and then your parents pay for it for the rest of their life also. It's so
loans
dumb.
that are then created are bundled together into a pool.
And this is what they call tranches in the real estate industry or in the mortgage industry, but they calling it a loan pool over for student loans. They're bundling the products and they're selling it as a package over into the banks or whoever it is on Wall Street that sees this as value, and this is the way in which they make money. They also make money from the fees also.
And these pools are often highly diversified by regions, by school, by borrower type, for example. And the diversification really protects the investor from losses that are idiosyncratic. They're then transferred to a special purpose trust, which is set up to hold the loans and issue the securities. Once that's done, the securities are then rated by a credit rating agency. Once they're packaged in this way, the securities are then sold to financially sophisticated institutional investors.
Can't y'all see that y'all to play? Can't you see that the middle class is the play? They literally just broke this down for you in even more of a simple way than I have. You to play. This is the exact same play that they did when it came to mortgages and that they still do today. This is the exact play that they made with regard to bundling different mortgages together depending on, and they call it diversify, right? They diversify it because it's different people in there depending on your region, depending on your credit score, depending on your equity, depending on how much that you have in mortgage back. Everything is called diversification in order for them to better bundle it, and then they put a rating on it. They used to call them AAA, right? Before the mortgage crisis. They put a rating on it in order for them to be able to sell it, get the fees from it, and then they sell it over to the investors, and then the investors then diversify their portfolio to be able to make money off of you. This is really what it really comes to. Don't y'all really understand that y'all to play? Y'all to play. The more money that you borrow, the more that they keep you under duress, the more that they continue to promise you things that they're not going to deliver on. The more that they continue to get you to market to each other that credit is important, the more that they continue to tell you these things without adding the context to help you to understand of how to use credit correctly, right, to leverage it correctly, the more that they can continue to get you to finance your lifestyle, whether it be college, student loans, cars, mortgages, credit cards, Klarna, Afterpay, trips, Christmas, equipment that you think that you need in order to start a business that you're not even going to be profitable in instead of scaling up correctly. Hats, clothes, water, businesses, small business loans. Don't y'all understand that y'all are the ones that's getting played, that you the finesse? That all I got to do is keep you busy marketing to each other, especially through the music and Instagram and all of this other type of stuff. And y'all told each other to go and get into trucking, and all y'all went out and bought trucks and shit like that. All I got to do is keep playing y'all, and y'all going to be the finesse. That's literally what the government is saying to y'all. They don't even have to sell you anything anymore. America don't even have to manufacture a product. They are making money off of you, making money for them in order to continue to live a lifestyle. Don't you understand that you the play? That the middle class is the ones that's suffering as a result of the play? Jesus Christ. You the play.
When the borrower pays down their student loan, that cash flow is then used to pay down the investor.
Sallie Mae and Navient are the two largest publicly traded companies issuing slabs. These assets are underwritten by some of the biggest banks and corporations, like Bank of America, Barclays, JP Morgan, and Goldman Sachs.
And y'all continue to sell to each other, and y'all don't even realize how much y'all doing it.